This video is for educational and information purposes only. Mutual funds and stocks talked about in this video are purely used as examples. This video is not meant for advisory or recommendation purpose.
Hello everyone, I am Swati and you're watching aliceblue YouTube channel. Welcome to our second episode of Commodity Corner. And for today's video, I will be talking about Gold Guinea. So, without any further delay, let's get started. Gold Guinea is a standard gold futures contract traded on the multi-commodity exchange, that is MCX in India. This contract is named after the Gold Guinea coin. This coin is a British gold coin minted between 1663 and 1814. So each Gold Guinea coin contract represents 8 grams of gold, and this allows investors to gain exposure to gold prices without actually owning the metal. So what is MCX Gold Guinea? MCX Gold Guinea is a derivative instrument in the commodity market. It enables investors to speculate or guess on the future price of gold. The contract size of MCX Gold Guinea is 8 grams, making it accessible for small and medium investors who wish to hedge or speculate on gold price movements. For example, let's say if an investor believes that gold prices will rise, they can buy a Gold Guinea contract and profit if the gold price increases at the contract's expiration day. Now let's learn the difference between Gold Petal and Gold Guinea in MCX. The primary differences lies in their contract sizes. Gold Petal represents 1 gram of gold, while Gold Guinea represents 8 grams of gold. And the purity of Gold Petal is 999 purity, while in Gold Guinea it is 995 purity. As you can see on the screen, the other parameters remains the same. So yeah, now that we know the differences, let's dive into the contract specifications of Gold Guinea. Gold Guinea, denoted as Gold Guinea, is a type of futures contract traded on the MCX, each representing 8 grams of 995 finest gold. The contract trades from Monday to Friday between 9 am to 11:55 pm with a maximum order size of 10 kg. The price is quoted in increments of ₹1. The contract start day is the first day of contract launch month. If first day is a holiday, then the following working day. And the last trading day is last calendar day of the contract expiry month. If last calendar day is a holiday, then previous working day. Tick size is ₹1, base value is 8 grams of gold, delivery is minimum of 8 grams with compulsory delivery, and it is delivered at all delivery centers of MCX. Now let's see how to invest in Gold Guinea. Investing in Gold Guinea contracts through the MCX is a straightforward process. Open a trading account with a registered commodity broker like aliceblue. Complete the KYC process by providing the necessary identification and address proof. Deposit the required margin in your trading account. Start buying or selling Gold Guinea contracts through the trading platform provided by the broker. Remember that like any investment, it's important to research and understand the product, market condition and risk factors involved in Gold Guinea trading. The key takeaways from this episode are: Gold Guinea is a standard gold futures contract traded on the MCX representing 8 grams of gold. MCX Gold Guinea is a derivative instrument in the commodity market, allowing investors to speculate on the future price of gold. Gold Petal and Gold Guinea are different types of gold future contracts on the MCX. The main difference lies in their contract sizes: Gold Petal for 1 gram of gold and Gold Guinea for 8 grams. The Gold Guinea contract traded on MCX has specific specifications including an 8 gram contract size, 995 purity and compulsory delivery. Investing in Gold Guinea contracts involves opening a trading account with a registered commodity broker, completing the KYC process, depositing the required margin and buying or selling contracts. And you can grow your wealth by starting to invest with aliceblue. The ₹15 brokerage plan offered by aliceblue can save you more than 11,000 rupees in monthly brokerage fees. Additionally, we do not charge any clearing fees. So yeah, thank you so much for watching this video and I will see you in the next episode. Until then, bye-bye.
Investments in security markets are subject to market risk. Read all the related documents carefully before investing.